Okay, hi there guys. Just let me know if you can hear me through okay, and then we'll get stuck into it. Hope we're going well. Hope we had a good weekend. It was all productive or relaxing, either way. Just let me know too with the stream if it does drop out a bit. It looks like it's the numbers I'm getting through are a little bit less than normal. So if it does buffer a bit, just hang in there. I'm getting video outputs a bit low, which is a shame. So we'll just see if we can. I'm guessing you can hear me loud and clear. Alrighty. Well, I'll just rip into it then. Welcome to TradeSetup and the live stream. It's the 28th of May, so end of the month nearly. A few more days. It's about the time when the mortgages are due, for me anyway. So the US on Friday night, we'll tick over that. We'll have a look at what they're doing. They're not, I mean, nothing really, not much happened on Friday night, but I think the US has gone. They had a public holiday along with the London Stock Exchange tonight, so it might be fairly quiet going to the European session. I wouldn't have expected us to be sold off this hard, but we're down 30 at the moment, which is just continuation of that. Now, we did have that good run up to, was it 61.50 on the ASX, and we're just backing off from there. Really just giving up a lot of those gains as the market tried. Oil was the first sort of decent move down on oil for a while, and it was back below 70 bucks a barrel. I think it was back below 69 a barrel, actually 68 something. So that was a decent little pullback, and there's obviously energy stocks in the US copped it a bit, but the Nasdaq was actually surprisingly that did okay. So the down, the S&P was down, the Nasdaq did okay. Let's just minimize. I'll get rid of that. I'll get up my screen just properly. There we go, and we'll just get into it. So the US still looks been a little bit heavy up here where we are, and that's probably what we're our market's factoring in a touch is just that's potentially the US rolling over, so we're sort of going ahead of the pack there. I think the Dow's looking a bit the same. Make that thicker. So again, they're both looking a bit heavy. You can see. Whoops, what's going on here? Drag across that across there. That is the S&P. Yeah, the S&P down. Very similar sort of patterns there. Structure, price action. You still got this big base through here at 23,250, looking like it's lifting off it. But still just this gets a bit heavy, so a lot of people will be looking at, okay, maybe that's a washout. We don't quite know yet. And I think this is what up in the air at the moment in the US especially, is this sort of pop up through this lower high just a washout, and then we roll over and we take out these lows, or we're going to pull back, put in some, a good sort of a big effort to build a base a bit lower, not a base, sorry, a higher low, somewhere 250 to 500, 24, 250 to 5. See if we can put in that high low, but again, just taking some time to build that, bring in some solid buying, and then start to edge up through that 25 and see if we can grind our way up to new highs again. That's probably what most would be looking at. It's just whether or not the US can, they've got enough to sustain that. There's enough positive news out there now. I just read something that if it's true, forget about any upside. We could be coming crashing down. I don't know if anyone's on the actual Discord. Did anyone see that link on Discord? Just let me know, and I'll pop it up in the chat if you want. It's about US debt. Pop that link up into the chat about the US debt. It could just completely, but they're just saying how the debt levels in the US are growing, personal debt, consumer debt, and government debt as well, not local and federal government. We know it is, but it's unsustainable when it's accelerating faster than GDP. So there's only so much debt the country can get weighed down. So we'll see how it's going. Look, I'll just post in the chat. I hope we can hear me. Everyone's just fairly quiet today, aren't they? Let me just get that. I'll get the link. I think that's it there. Now, I think this is the link here. If you go paste that, pretty sure that'll open up. Yep. All right, so that'll open up the link about that. It's an interesting read. So if that's the case, forget about this making back up to new highs, and it's going to be just pressured. The market's been pressured by the weight of their debt collapsing, and there'd be all sorts of strife if that's the case. So just bear in mind what could be on the horizon for the US, whether it's going to flow on to the whole world with another GFC2 potentially, but we'll see. We'll see. So it's always interesting to just take note of where all these other, even though there could be doomsdayist articles, there could be anything, a bit of the bears beating their drums, but it's always worthwhile just reading about them. Alrighty, let's get on to, so while we're here, just whack in anything you want to take a look at. What I'm going to talk about, just while I took a note, we'll get onto the ASX actually in a second, but just chuck in any shares that you want to take a look at. And then I'm just going to pop over and look at a US yen. I just want to quickly go over that. I think it's worthwhile talking about a trade setup potentially and how we work our way through with our sort of approach in markets and what we look at, how we work our way through the actual trades. How we plan them out with different time frames, and then we'll get on to just looking at some of the stocks in the ASX. So while we go back to FTSE, that's backed off from the highs. DAX, I think they were lower or slightly higher on Friday night to close out the week. The US dollar itself, net short positions are obviously week by week are reducing. So it doesn't mean that the US dollar is a buy. It more means that short, that's the shorts that have built up. Maybe they're just closing out some positions. There might be a bit of a bounce. We have had a decent enough bounce on the US dollar anyway, but whether it's just sort of gets range trading over the next, I don't know, month or couple of months, but we'll see. Let's look at the XJO. Decent enough day today. It's starting to accelerate. We're getting extended on the downside, so sooner or later I will expect us to pull up short and start at least build a high, maybe a higher low, and then we'll pop up and just see what happens from there. Obviously, there's two different price actions I would like to see. Well, which would be ideal, or to take note of, I guess, to say. If we've had a good run up and we're pulling back here, I'd like to see something like this. If we see that, that's more conducive to the market starting to lift. But if we've headed up and we pull back and then we get this type of price action, I would rather see it sort of bounce around and contract a bit, well, let's take that back, a bit more like that, where you get a bit of a squeeze on, but at these lower prices, than react like a V-shaped sort of recovery and then do something like that up the top, because that would be, for me, a deeper correction. That would lead to potentially a deeper correction and roll over off a major lower high, potentially up towards 61. So if we can just come down here, maybe a bit of a blowout first, you got your move up, bit of a blowout, and then we come and just start to contract in at higher levels. That would be ideal, I think, for that move up. But we'll see. Just got to keep an eye on the price action at the moment. We are getting extended to the downside. So whether these daily moves down can keep grinding lower, or we just hover down at these down at oversold levels. And the weekly trend, I think the weekly stochastics is just rolling over, so we could get a bit choppy going forward. Like, I would expect us to get fairly choppy going forward. Well, what's everyone else's views on the old XJO? Fairly decent correction, or do we expect this weekly trend to continue up? Righty. Just got my coffee, just having a bit of a sip of that. It's coming through. All right, now, what have we got? I just want to take a look at, we've gone through our markets. We've got a couple of good ones that have kicked off for us. Blackmores, we got that the other day. That's kicking off nicely. It's actually pretty much 133 we entered on, so we've got that long. We've also got ATS pretty much where it is here at 80, so 41. That's going up nicely. So I'll just go through the alerts we've got going at the moment. That's going nicely, holding high lows, looks really positive. We've got bots pretty much, it's looking good. just wouldn't mind that grinding through or kicking up through that 15.5 zone. The weekly looks like it's on the rise there, so if they can spike up and we get a bit of a spike to 20, that'd be awesome. Yeah, no, good work, Laurent. So with this one here, I like this purely because they had a capital raising, I think it was 18, and it got announced here. The market was going sideways until then. Continued for a couple of days, and you would have expected most of the time lately that anytime you get a capital raising, it gets sold down to that price or even overshoots the mark. So sometimes you can get the market spike up and you wonder what's going on, and then they have a capital raising. It's spiked up through there, and they say their average price of the last few days is, whatever it is, you're getting the capital raising at a 10% discount, and sure enough, it goes straight back down to that capital raising or lower. This didn't, which is kind of handy, and I think it's quite positive on Celsius Resources, purely because if it doesn't, maybe people in the know something good happening and there's some positive news coming, or whatever it is. So it's looking quite strong at the moment. We'll just see how that one kicks off. Whitehaven's backed off for us, back down through 5. We've taken a partial on that at 5.13, I think it was. Got a bit higher. We've got our stop in at 65, 465. So we're giving this quite a bit of room to continue up. We'll just have to see if it can't hold up here and punch back up. Then we're probably expecting to get stopped out of that. But either way, got some profit booked. It's a break-even trade. No, sorry, it's going to be a positive trade anyway. I think that's all we got. We got out of now BPT. That's one we got out of up towards 173.5. I think it was 172.5. And I don't usually do that. I was talking with Davin about it. Don't normally cut out a trade on the second half. Like we will be more than happy to take a partial when we come up into resistance or when it looks like it's a good opportunity time to lock in some gains and let the second half run. This for me, I just saw that this is a different story. I just saw, on the weekly chart, we're getting overextended. And if you go right back, it was extended into these highs, previous highs around 170.80. I think we've talked about this for a few times. It was extended up here on the the monthly. You go down to the daily, it was extended the monthly, the weekly, and flick it down to the daily, and we're extended the last month and a half. And obviously, oil had a good rally, and oil wasn't kicking on. Like it was not kicking on with any volatility, having these wild spikes high. It was just on a grind, so it was on a bit of a tear. Grinding it's day by day, grinding high. And it got to a certain level where you thought, hang on a sec, crude's been grinding higher, we've been grinding, BPT's grinding higher with it. And after a leg up like that from pretty much 120 up to 180, close to 100%. What's that? That's about 80%, isn't it? 70%, 60%. A good gainer either way. Without so much of a decent correction, it's just day after day grinding high. Even if it's your positive longer term, you would expect some sort of corrective action or that sort of complex correction off those highs, like we saw, back probably start of the year, where we did have the good run up, complex correction, and then we got that secondary leg up. So we're taking advantage of that secondary leg up. So now I'll be just keeping an eye on it to see if we do have another complex correction like we did here. And if that's the case, good part of 4 or 5 months, 3 to 4 months maybe. It could take its time like it did on the previous leg, could go sideways for a while. So you're better off to be out than in. So we don't normally, I'd rather get stopped out of them, but this one just looked too good to be true. I just could not see the probability of a continue higher got very, very low for me. So as it's turned out all right. But like I said, wouldn't normally do that. Normally you'd have a leg up that would have these little pullbacks along the way, and you've got a better place to place your stops, whereas this one really did not have any of those sort of those daily pullbacks, reconsolidate and head higher again. It was just overbought the whole time. All right, so, and PNV will do, Laurent. We'll take a look at those. So I just want to go over, for anyone that has been following the currencies, I thought it'd be interesting just taking a bit of a top-down approach to what we're looking at on, no, it's the US Swiss. Let me get it back up, the US yen. And just the importance of actually looking at the different trends. We'll start off at the weekly. So what we're looking at in the weekly, you can see the market's come up into a fairly decent sort of a level there. So from left to right, you see the yen had a good push up, a big pullback, found the base, found some buying support, popped up, major lower high, come back down, retested that big support through as around 101, pop back up another lower high. So you can see there the lower highs on the major level. This is on a weekly basis. We're really pressing in. And then you've got a nice long extended move down, which took out the lows around that 79. So it extended into that zone, really didn't look back from pretty much 124 all the way down to say 77. So that was a good solid move down, lower highs, lower lows all the way down, washed out that zone into the range. This case, it spent a lot of time around that zone, banging around, and then built this little higher low, which led to the current move up. But the thing is, instead of what we've seen all that pressure, 1, 2, 3 lower highs, the market's turned around and headed straight back up to the most recent lower high at 124, and even washed out that zone. So you can see the reaction off that zone. It popped back down. So if we go into a daily just to look at the most recent price action, whoops. So that's it up here. And you can see it backing off from that level, got down to 100, and we had a nice little correction, and we built another major lower high, a lower high. So what I'm expecting from sort of this move, you either expect the market to pull back, to that major support, or build a higher low. And what you can see, we've broken this move down so far from the highs at 118 down to pretty much 104. It had it in two legs, in two stages. So I'm just trying to, what is the likelihood? What we're looking for basically is a short sell, and I'll show you that in just a second on the lower time frame charts. But you've got to keep it in mind of what the overall structure is. Looking at this, I'm not sure whether this is just you two moves down and we start building and going higher. But what I'd expect us to build is off a higher low and see some leg down, and then we've just seen this pop up until where we are at the moment. So two things I'm looking at: whether this can extend all the way down to that support at 100, which means if we do, there's some really good little, a potentially good short on the US yen. And if that's the case, just taking it one step back, that's your first leg down. This could potentially be the start of a major leg down, which could take us all the way back down to that weekly zone we were just talking about, somewhere around 79. Not saying that's going to happen, but it could be that sort of rangy sort of price action. And if you read that article that I've just popped up on US debt, that was sort of playing well. You'd expect everyone to be bailing on US debt and selling the hell out of US dollar. So just bear that in mind. The overall structure, we don't know what's going to happen. We're never going to know what's going to happen until it happens. And it's easy. That's why everything's so much easier in hindsight. But we have some zones and we have some potential catalysts where if this just gets completely poleaxed, and we're on the daily now, over the next few days, next few weeks, this is either going to just retest off or react off 100, or just going to plow straight through it, because this overhead resistance is so strong. And you can see that had a good reaction up. It didn't spend a lot of time up here. You can see it chopped around for a while, and then it started that leg down. We extended straight back up again, bounced pretty hard, and we spent the time pushing down. But this here, for weakness, we could just start extending down and start accelerating down, plow straight through that level. So just bear that in mind when we go down to the lower time frame charts. If we go down to what we're looking at, the 4 hourly now, the reason why I'd be happy to be short, we've had this leg down, we've had a correction up, but you can see this leg up is starting to fail. We've just broken that. So what I'd be looking for is that lower high to come into play and get that continued weakness. So does that make sense for just what we're looking at? Major lower high, and if we just remember what the overall price structure is doing, that's going to continue lower. And whether we go lower and just fall short, it doesn't really matter what we're going to do. If we touch on this zone at 104, okay, it's a good trade. From 109, it's a decent trade. The risk reward is going to be 3 to 1 probably, potentially 3 to 1. We'll just have to see how it plays out on the entry, if it does play out that way. If a lot more weakness comes in and we head down to 100, it's even better. If it heads straight through 100, so be it. But we've still got a lot of pressure potentially on the downside, and we're seeing that this could be, and what we're looking at this zone as playing out as, we just do that, as more your major lower high. You got a lower high in here. It took a while to build out, lower high there, and it pressed down straight through the most recent swing low, and then we're potentially going to be targeting that swing low. Now, if we're completely wrong, and this starts to show some strength, and we're going back to that, we've had a good pop up here, push down, consolidate, a secondary move down, but we are still quite away from that support at 100. That's your secondary move down. If we're wrong and this pushes down and builds a higher low, so be it. You would expect if we do get this sort of a lower high structure play out, whether it's like this, the lower highs come to play, we can get an entry not on the 4-hourly chart, but potentially down to the 30-minute, 1-hour charts. We still got a trade on our hands, but even if we're wrong, we could still get some fat in that trade, and we could still be profitable on that trade. And you've got the potential to get at least 1-to-1 or even 2-to-1. You can still get 2-to-1, but your overall hypothesis of that longer term weakness is you'll have your hypothesis or your trading what you've planned out to happen. You've covered scenarios. If you're right, this thing should start to accelerate and really start to bang lower, and then okay, you just sit back and relax and watch it go lower. But even if you're wrong, you could get some fat in that trade. You wouldn't expect to see. Let's draw that up. What you wouldn't expect to see is your market to pop up, get your entry like that, and just boom, straight up. Now, if it does, that's the whole thing about risk. You've reacted back up. You've got a lower high in here. You're coming down. You've got your entry through the most recent high low. You've got your entry because this is going to be potentially be a major lower high. It stops you in and turns around and reverses straight on. If that happens, okay, that's trading, so be it. But after all this pressure, what we've talked about on the the 4-hourly, the daily, and going back to the weekly, there could potentially be a lot of weakness stacking up on the US yen, or into the US anyway. All right. Any questions just on that, guys, before we have a look at some shares now? Does that make sense, just what we're talking about in the US yen, how we're potentially planning that trade? And we're looking for this leg, because this is a good, healthy correction up, higher lows, higher highs, pressing up. We're starting to fail. You can see that trend line going up. We've broken down through that. We could be coming into zone where we can react, and we might react back up, and then just looking really to see if we start getting some more selling pressure coming in on the lower time frame charts, and then if we get an entry we're happy to trade, happy with, that we know exactly where our risk reward is, you can have not fairly loose risk, I wouldn't say, but don't put it 1 or 2 pips above a lower high, because generally they're going to come back down and probably pop up a few pips through the highs just to clean it out and then roll over, so you don't want to get stopped out and still be right. But yeah, I hope that makes sense, just the way we plan that out and the potentials of the actual trade. If we're wrong, okay, it's got potential. If we're right, it could have some massive potential. But that's just a sort of good little rundown of it all. All right, Lauren, we'll have a look at CBA. Chuck in some shares, guys, if you want to take a look at them. All right, let's get rid of that. So VPT still continuing lower. Just want to see what else we got here. Whitehaven, okay. Bot, honestly, that trade through 15.5. ATS still 41. Okay, that's a cracker. Look at that. So this is one that's probably worth having a quick chat about as well. If we just go back, you can see it had a powerful run up. This is on the monthly chart. Big run up, good correction lower. We've had a good correction up. So even if this chart, if you look at it from a different perspective, if this is consolidating with higher highs and lower highs, higher lows and lower highs, I'll get rid of that. Open it back up. I'll draw up what I'm talking about. So we've had the market sort of chop around here and then turn around and headed straight up, had a big run up. We've had this big move down. And what was that? That was probably about 50%, 50% retracement of this move up, that leg up through $220. But what we've done now is bounce back up from there. Yep, just mute that. Sorry, guys. All right, that's good. So we've had this pop up here. We've come back down, and now we're about here. So really, what I'm looking at, I don't really mind if this just consolidates. Over the longer term, over the weekly charts, we'll probably have to draw that a bit better. I think this leg up was quite a bit higher. We've come back down, and we're about here now. So for example, if price does consolidate, you've got to take into perspective where it could still go to, even if you're, it doesn't, we're not looking for this potential to break out to new highs. If we're on board, we're long on a good setup and this starts bouncing around a bit more and it sort of consolidates a bit more before we get our higher low and then taking off, we probably would have potentially booked a partial on that one, but we'll still leave ourselves open for the next leg up. But I don't mind if it bounces around there and we still get a little positive trade on it. Or, I mean, if it just does go from here, go straight up and then consolidate outside of this contraction, and then on we go to new highs, we target that 220 again and up she goes. That'd be great too. But you can see that on the monthly or the weekly, we've still got quite a bit of room and we can get up to 170 potentially. And it's still within that sort of a squeeze zone. And that would still give us, what, we're up about 6 to 7% now. We could be up 10% on that trade and look to book a partial. If we just get this acceleration up, we go sideways for a bit and it looks like we're getting a bit extended up here. We're potentially rolling over. All these factors, take a partial, book some, let the rest potentially just down here open up a bit and see if we can get that contraction, like we're saying, but still having wide enough risk where we're not going to lose out on the trade because we've already booked some, and seeing if it can break out and see if it can. It may take a long time. We may be the case that it's on the weekly chart that it contracts a bit. We take it all off. We might get stopped out, but we've got this bigger picture that could be playing out. We've bigger picture planned that could be playing out. I hope it's making sense what I'm trying to get across, but like I was saying, that daily is looking good. So technically on the daily, you'd be looking up at least to closing this gap at around 160, potentially look at those highs at 175. If it gets to 175, you're assuming this is breaking out of this. It's holding a major high low. I mean, that looks good. It still looks good from a technical point of view. You've got contraction lower, cleaned out half, 50% move of that original move up. It's backed off, built your major high low. We've popped up, pulling back to build another high low, and then we're starting to go up, then you'd be looking for at least 175. If we react lower off that, we'll have to assess it from there. But if we just blast off through and we start attacking those highs, that would be the perfect scenario, the perfect storm. All right, well, let's get into it. I'll get on to looking at CBA short. We spoke about this one, Lauren. Looking at this, I mean, if you shorted that here, for example, I don't know if were you short on that, Lauren, or are you just something you're looking at? For me, shorting that, just you got to take a step back. For me, there's not too much. We haven't got a setup. I think we're past the potential setup. You would have been short through, say, 70 with a stop at 72, $2 risk. But that's only on a minor scale. You can see that leg down has come. We've had that sort of push up. It started at about 82 bucks there. We just popped out through 82, and we've holding on the weekly. Is it weekly? It's on the daily. Daily lower highs all the way down. So this is a very minor level. If you did get involved, let me draw that up. If you did get involved in the short side just in here with a breakthrough, say 70 bucks, your risk is going to be up here. It's only on the minor. It's only a minor lower high. There's nothing significant about it. This is more of a significant level, same as this, maybe that. And then you've got your major level up to 82. There you see your swing levels had a good move down, and that you can tail those when you get a higher low, and it presses up and it starts to fail again. This one, not so much. We more just retested before we bounce around. It's more, that sort of consolidation through between 74 and 71 before we started failing again. So this is not a significant short just there. Just looking, okay. Yeah, we'll look at the weekly. But we're extended down here. You can see that on the daily. And if you go back to, I was just looking at that weekly chart, I wouldn't short, especially the banks off the weekly chart, because potentially you have to have, for me, if I'm looking at that chart, I don't care if it's daily, weekly, 5 minute, 1 minute, your significant swing level is up here at 88. And so I'd ideally have to have my stop at 88. Does that make sense? Because you're trading it from a weekly. So you're looking at this move down, a pop up, major lower high. It's pushing down at the moment, and we're well and truly extended down here as well. So for me, that's looking like it's building for a bit of a washout more than anything else. Wouldn't sell into a market that's extended on the downside into a key $70 support zone. If I was going to sell this and I was looking to sell it, just as a bit of a, even off the weekly, I would like to see this market, okay, we've pressured down into that support at 70. You want a decent enough push through, and then I want to see, just go back. I want to see the move down. We've got through that support, a bit of backing and filling up. Again, your two sort of legs, and then I want to see a lower high because I want to see it drag in some buyers and get you ready to squeeze the buyers out. And that does two things for me. You can come back into that zone. You can come into some sort of key levels by this backing and filling. This sort of high low play there. You can come into a key level. It could be around 73.5, 74, could be up at 77, where we get a key sort of a major. We're looking to trade short on a major lower high from the weekly. If we can get back up there, and then we start getting those lower highs in the daily, then you know that there's enough buyers that have bought it off 70 that are potentially going to get squeezed out, and then it head lower. So what the market tends to do, what was it like? It was like that long jump, or triple jump, whatever you want to say. What we're talking about, if you can't jump a certain distance, you're going to take a longer run up. You're potentially going to, if you go off say 10 meters and you're going to jump 3 meters, and your aim is to get 5, and you go, okay, that doesn't work. You have to take a bit of a longer run up, so you have to come back to about 20 meters, and then potentially you could jump that distance. But it's proportional to the bit of a run up you've had. Now I look at it as the same. That you can see the market's pushed down into this level. It's had a good run up, but the market's it could be coming into a zone where it's getting a bit supported. So maybe this run up wasn't quite enough if they were going to break. If you're expecting a big break of 70 and a push, a decent push lower. So what we may have to do is back and fill, take a bigger run up at that level, build a lower high, a major lower high, something where you get price action like this. You can see it's popped back up. You get that washout at the high, and then start to head lower. Get a lower high just in here as well on the weekly. If you went down to your daily, you probably get a setup on this. You can see this red candle. I'll draw it up. This red candle here. That might have been, looking at the daily after this type of move, that could have been ideal. So if we do that similar type of price action as we get here, we even get a washout somewhere at a level, maybe a minor or key level, and then you start getting your lower high in the daily charts, yeah, then potentially that could be a short. Even if you're wrong, you've got a few dollars up your sleeve to be wrong. It could head south. It doesn't get anywhere near 70 from say 78 or 77, get down to 73. You've got $3 up your sleeve on the short side. You've made a bit of a profit before you start seeing some buyers coming in, and then you've got to reassess and go, okay, this is a key zone at 70. We've gone from, we might have popped up here to 50%, gone back down to oversold. We look like we're holding a higher low on the weekly charts. I might just pull the pin on that long because you know that the banks are not going to stop making money. So that might be your sort of train of thought, but I think to sell down here when you are definitely well and truly extended into a key support zone at $70, it's a tough gig. And then you'd have to have your stop, probably a tight stop. I'd have it around 84 because then I've got room to move, but I'm not willing to risk that. I'm never willing to risk that. All right, that makes sense to you. What was the other one? PMV. Now that's the opposite. That's actually looking good. That weekly is looking good. Now, one thing that's got me here, you've definitely got this structure that's working out. And as you know, I'm not a massive fan of buying. If we get, I always view this when the market's overextended to the upside, you've got a clear level here. I mean, if you bought it through, what was that, say 16, what is that high? 16, 15 highs. Now, if you bought it through those 1650 high and it just went straight up through there, your stop's going to be about 1550. Okay, that could be a legitimate sort of an entry. The market's sort of consolidating sideways. It's not on a bit of a pullback, so it could be a good sign of a strong market. I just don't like how the stochastics are up into overbought territory because to me that's when it's overbought. I'm always questioning how many more buyers on the sideline are ready to come in and fuel that move up. Potentially up to that $18 zone. Is it 18? Yep, $18. how many more buyers are ready to come back in and push it up, help you out with your long? You've got your entry there, you've got your risk. Who else is left on the sideline to trigger that for you and continue that move up for you? When you're into that overbought zone, I proportion a lower probability to that move. I proportion a much lower probability to that move or to that scenario playing out. So what I would look for if you do get stopped in here, I would consider that more your potential. It's quite a high potential you're going to be washed out of the market. I know a few people would probably disagree, but that's just the way I sort of like to base my trade. I like to get it doesn't have to be an oversold. Um, say we have a pullback here. It doesn't have to be oversold, but I just like to see a few people cleaned out from this move. You had a decent enough pullback. You're potentially going to build a higher low again. You can see the price starting to contract and then looking for an entry when it's back on the rise. You can have the stochastics gone from 80, 90% down to 50%. Doesn't really matter. And they start heading back up again. All that to me, and then I would be looking to that move is potentially going to gun through those highs at say 16.15 or 16.20. And then I think you're buying on the rise, you're buying off a little pullback, you've got minimum risk. And the most important thing, you're getting something, you're booking some profit, you're potentially on the right side, you're sort of getting in the prime little zone where you've analyzed it correctly. Your overall structure's rose here. We've had some a good corrective action, lower highs playing in. So we've cleaned out a lot of these late buyers, the buyers through sort of this level in here and higher. They've all been cleaned out with this move back, and we're starting to lift again. Definitely starting to lift. We've got a market through here is literally where if you get something like this, by the time you potentially proven wrong, it gets back up to these highs and might start to fail. You might have a break-even trade or a small profit before you just cut your losses and cut your profits before you realise that trade is not working out to plan. You can get back on the sidelines and reassess it from the sidelines rather than be in the trade, because your mind's never clear when you're in a trade, especially if it's starting to roll or move against you, or you're potentially starting to lose on it. Does that make sense there, Lauren? Hope it does. That took me a while to explain. All right, what's the next one? A quick squiz at CGC. All right, let's get into that. Well, that's just been, what is that? Costa Group. All right. So it has been rising for quite a while now. We're sort of getting onto the all-time highs. Is that right? Yep, getting onto the all-time highs, which were 768. We've had a couple of weeks down here, popped up, bit of contracting. I don't mind that. You can see that sort of slowly curving. You can see every time it's this, I like this type of pullback. You can see that's a big washout on the weekly, which was this move, big washout before it started spiking higher. You get sellers coming back in again. It's getting bought up at higher levels around that 660, popping up. Sellers starting to come in again because they're thinking this could be the high, and we're getting a lower high here. It's coming, and it's been met with some more buying. So this, let me just get that up. This zone in here, I think, is a key sort of it sort of transformed the way you'd be viewing it. Because if you were, this trend is going up, you've had a key correction, pop up, pull back, and if you think this is going to get all the way back down to sort of this, well, let me just get back in this level in here off a lower high. It's at about this stage when you realize I'm going to be wrong. There's buyers are supporting it, buyers supporting it, buyers supporting it here, again here, maybe here. So they're really starting to support it here. I mean, there's nothing to say that it could be struggling. It's a tough call. I always find this sort of a tough trade to buy on a move up through here into new highs. But then again, it's actually good to buy into new highs when things break into new highs. Like Davin would always say, everyone's a winner. So your resistance level or your sell levels or where you want to get out, potentially you're going to find some sell. There's nothing there. There's no levels really to sell into. It's sort of more of a random, so you don't know whether it's just going to continue, little spike higher, a big spike higher. It's going to do something like this, just blast off. If it blasts off, then you know that people will start to the books are private sooner or later, and then you get your corrections. But it's a lot easier to follow something that's trending higher on the longer term, so your weekly and your daily, moving into new highs each time, because no one's really been flushed out of the market just yet. But yeah, if that's the case, and if that was looking like a potential buy, you can see that buyers are stacking up in here. It's just a bit away from this, your trend line for my liking and such. But what you can see, it's gone from overbought to oversold. That was, this correction here. It's gone from not so much overbought, went sort of down to that oversold zone. It really didn't move back that much at all. It's gone up again to around 80%, started getting bought up a bit. Selling pressure's coming back in to around 30 to 40% on the stochastics. Yet it is holding up. That the pullbacks are very minor. So for me, that looks like it's ready to pop. It's potentially ready to pop. But just how much is in it? That's the other question. Are you, when you're buying to say something like this, that's great because you've had a deep correction. You know that if you're gunning at least to retest the highs, you've got a lot up your sleeve. Where here, we could spike through the highs and then everyone's sort of left standing. Maybe there's not too many new buyers just in there. So that's why I'm always finding these sorts of trades, banging to new highs, I find tougher to trade than something like where it's made a high, it's had that secondary correction, like here, pullback, lower high in here, a decent pullback, big washout here, and then starting to build. I mean, there wasn't really a setup there, but I would find that I would be looking in that zone to potentially continue this weekly trend up. All right. But yeah, I mean, it's definitely on the move up. So if you are long, great. Just know exactly where your risk is. If you're looking to get long, again, it's up to you what you want to do, what everyone wants to do. It's all risk reward. Yeah, I hope that makes a bit of sense. Anyone else got something they want to look at? Otherwise, we'll just call it a day there. I'm just going to continue to look at BKL. That is smashing along. That's going very nicely. We'll see where this can get to. I've got a feeling it's going to close the gap at 160 before, close this gap here, potentially, before we have some sort of corrective action lower. IVC will do, John. All right. That's been belted, hasn't it? InvoCare, 2.5 million. 2018, one on a weekly. Look, you have to go back to the monthly, I guess. Oh, actually, in saying that, if anyone can always argue things change over time, that's great. But that to me is, you're sort of in that zone where you're coming right into the zone. Pretty much here, where we are roughly now, you can see that the stochastics are quite low. And on the monthly, they turn a bit cleaner. So, when it turned here, had a good correction, corrective action lower, started building. You're going to get quite a few months up your sleeve, you'd think, because if you're looking to be a buyer, or if you're signs of positivity, you wouldn't want to see it just pull back like that, bang, straight up, because it's a bit like the ASX. Then you're going to go, you have to sit through this type of action where it just, and that could take a year or two, because don't forget we're on the monthly chart. Then again, I mean, because we're on the monthly, if it does react straight up like that from here, it's come down and straight back up, rather than doing this price action where you spend a bit of months sort of consolidating at the lows and then starting to hold some higher lows and then breaking up out of that sort of contractive price action, because we're always looking to buy on the rise rather than sitting in through this mess when it's contracting on the weekly, so the monthly, and we're looking at daily financial. We get in the daily and we just, all it is bang, 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 bang like that over the longer term before it starts building its next major leg up. But either way, on the monthly, that's, for me, that's well and truly in the zone. You can see how it's 3 months down, 4 months down. The start, the close of the month was lower than the start, the open, except this month here we've got a green candle pretty much rejected. So it was that sort of first sign that we're starting to find some buying stepping at this zone, mainly off the monthly. I wouldn't say, I mean, you look at the weekly or the daily, it's in a downtrend. And then again, this month, we've had potentially some buying support come into it, only just recently. what do we get? Yeah, so it's this little pop up here. So yeah, it's showing on the monthly a bit of rejection. On the weekly, nothing. I wouldn't step near it. Just looking at this weekly, it hasn't done anything. And the only reason I say look at the monthly is because if you're looking to buy it, you could be sitting through quite a bit of heat. And by heat, it means you could go from flicking from profits to losses, and doing nothing for a while when you could make use of your capital somewhere else. If that was a daily chart, what we just looked at there, if this was a daily chart, okay, then you'd be scrutinizing a bit closer for an entry setup. But yeah, just looking at that move down, that was quite savage. So we could just react up and then come down and then start building a bit of a base. You want to see something that's giving you an inkling of a higher low. It's definitely in a really good zone. If you go into the actual daily looks better than the weekly. Let's just draw that daily up. Now, you've got this sort of action. Oh, look, it could just be starting to break out, but we haven't got through the anchor. This is the anchor here. So I'd ideally like to see it break up through that anchor, and then we've got anchor here. The market's basically, you can see it's come down. Got a little minor level here, and then it's just popping up to about here. Ideally, I would like to see that push up through the anchor. Maybe you get a decent correction, whether we get back down to those lows or pull a higher low. I want to see some sort of corrective action. And then if I draw that properly, this is what I'd like to see. Because then you've got a good setup here. And all this action here is a major high low, don't forget. But what we're doing, we're getting on the right side. The market's squeezing in where buyers and sellers are coming. They're sort of matching off. They're coming to a point of agreement, but that point of agreement is higher than this low. At say, what is it, 1150? It's higher than the previous low. So it's building a higher low, especially after you've broken through the anchor and we're starting to break up out of this downtrend. Everything's starting to line up, and then you could potentially buy, on a push up, buy up through a minor lower high. You know where you're going to put your risk. You're not risking too much on it, and then this could just be, this move up, a new leg up here. It could be just simply that spike, the spike down on the monthly, what we're just talking about. It doesn't matter. This is spike down and we get this little spike higher. It could still mean you get a couple of dollars up your sleeve before it starts rolling over, but just remember the bigger picture. Does that make sense there, John? So that would be my plan of attack. I want to see this. I want to see it come back, just because I think it could just start to get a tad messy because of that longer term picture. But it definitely, this zone here on the monthly is the zone to be in. We are extended on the daily to the upside, so that's why I'm expecting more this type of price action. Maybe wash out those highs, wash out that anchor level, because we're stretched. And don't forget, anyone that's been buying it has, if you're going to be a buyer, you've just watched this move down. So I would much prefer someone else to do the heavy lifting, someone else to do the buying. I want to see this high low build. I don't think it's going to go from here when it's stretched up at here and just blast off from there. I think it's too much to expect the market to do. Yeah, no, good. It's a good one, I think, to have on your longer term watch list there. Definitely, I've got to put it on there now, John. Just remind me in about a month or so to have another look at it. All right, probably call it a day there, guys. Thanks very much for joining me. The market's down 32 at the moment. We're just sitting right down on that 6,000 level, and there's really, looking at the daily or the weekly, there's no clear sort of zone we could pull up for support. That's the problem. So that's probably where your Fibonacci's would potentially love it. So you'd be looking for that, whatever that is. We're probably somewhere around 30%. We might be 33% of that move up. This move up here, we've retraced about 33%. 50% is more. Let me try to work it out quickly. Lowers 57.50, high of 61.50. What's that? 400 points. 61.50. Probably somewhere around 59.50, isn't it? Yeah. So it's somewhere around 59.50, I think, or 59.70. So probably another it could pull back 50 to 100. We're not coming off support. We haven't built a high low. We're in a downtrend on the daily, and you can't say just because it's got back to the MAs, oh, it's a good support zone. You don't get support off an MA. You get support off a zone where people are happy to buy. I've seen a lot of people say that on technical analysis. Oh, the support from the MAs. I don't believe in that because there's no psychological reason. I don't think. Um, it depends how many followers that sort of train of thought gets, but I'm thinking it could extend a bit lower, and then I want to see if I'm going to be a buyer into the ASX and start really loading up. I would like to see the market, keep clicking that, come down, little bounce. If it takes out that low, then I want to start seeing some high lows or a bit of contraction, and then you start breaking a key level, and then you can say that that's put in, and we're starting to build that major high low on the weekly. All right. Anyway, call it a day. Thanks very much for joining me, guys. We'll be back in on Thursday. Have a good couple of days. We'll see how we go. It's probably going to be a quiet night. Obviously, going to be a quiet night tonight in the European US sessions. US is closed. Yeah. Right, Helen. I don't see. Maybe you've got something through here at 60, but 6,000. We'll see. It is extended on the daily, isn't it? All right. Call it a day there, guys. Thanks very much for joining me. I'm back in on Thursday. Probably quite a day, like I said, tomorrow, but we'll see. Cheers, guys. See you then. Bye.